How are we doing, everyone? Good. Ready for Thanksgiving break? Ready for an auditing exam? The enthusiasm for one is much greater than the other, but one is definitely more immediate. All right, so we've got auditing exam coming up on Wednesday. You all know the drill by now. So just as a quick note, you will need a writing implement. You will need, I would suggest a pencil and eraser. Can you do it in pen? Yes. Don't suggest it, but you can do it in pen. Want to do a pencil and eraser. You will not need a calculator. There will be no calculations on this. If you pull out a calculator, you'll have to prove to me that you're going to need it for some other reason other than calculations, because there are no calculations on the exam. So keep the calculators at home or in your pack. A little bit of breakdown. So remember, this was our kind of our cram session. We had 7 chapters that we covered in a period of 3 weeks. There's basically going to be 2 questions each on each chapter, and I say I combine 14 and 15 as a chapter because I covered them in the same lecture. So 2 questions on chapter 10, 2 questions in chapter 11, 2 questions on chapter 12, 2 questions on chapter 13, 2 questions between chapters 14 and 15, then 2 questions on chapter 16. There will also be a question on the Code of Professional Conduct, which if you do the math, that's 13 questions. So it won't be exactly 1 question on each chapter. One question will only have one, or 1 chapter will only have 1 question. I'm not going to tell you which, that's privileged information. But that's basically the breakdown. The problems, there will be 1 problem of controls testing, very similar to the one that's in the practice exam. So it'll come from chapters 10 through 13. And we'll have a focus on one of those series of chapters. And then the other problem will just be a general question that can come from any of the chapters, so 10 through 16. There will probably be some sort of emphasis with respect to 14, 15, and 16, since that's not covered in the previous problem, but there could be elements from all the chapters. As far as the study guide goes, let's talk about the first 2 pages. So there was a request by one of the students in here to talk about what is the most relevant information on the first 2 pages. So I decided to delineate the first 2 pages, what relevant. So first of all, let me tell you right now, it's all relevant, okay? Which is probably not much comfort, but you do need to make sure you know all this. But what are some really, really, really important things for the upcoming exam? So the first one I'm going to say is management audit assertions, okay? And specifically related to that, I'm assuming by now you all know the assertions. If you don't know the assertions, and by know, I don't mean you can regurgitate what the list of the assertions are. I mean that you can tell me what each of those mean in context, very, very in depth. If you're not to that point, get to that point again, because you need to be ready for that. But one thing you probably need to know that's very relevant to this exam is, how do we determine primary assertions, all right? Because we talked about this multiple times. How do we determine what the primary assertion is? In most situations, this is going to have to do with the nature of the account that we're looking at, okay? So a few of those accounts are going to be a little bit nuanced. Like if I mention allowance for doubtful accounts, we always talk about what assertion with respect to that. VAA. But for the most part, the accounts are going to be defined by the account type. So if it's assets or revenue, our primary assertion is going to be existence occurrence. If it's liabilities, equity, or expense, our primary assertion is going to be completeness. That's pretty much it, okay? Now, there's, again, a few specific ones, like allowance for doubtful accounts, that have some very basic assertions associated with them that are unique to those, because that's what they always talked about. But I want you to know the general rule as well, and that's kind of that approach there. So how do we determine the primary assertions? Just depends on the account type. Also, it goes without saying that you probably should know the types of evidence in the audit test. This is particularly important right now as we're talking about the test of controls and the in-depth details. So know all the types of evidence. You need to know what phases of the audit they're applicable to, what assertions they can test. There's going to be some very specific references when I say what would be the most appropriate test to use in this situation. You should be able to identify it. Also, as a piece of relevance, we'll talk about this more when we get to the chapters. Make sure when you're identifying audit evidence that it's appropriate to the situation. It's appropriate to the situation. So example, if I say, we've got a segregation of duties control here, what is the most appropriate test for segregation of duties? Don't blurt out inspection of records and documents, because then I will write down on your paper which documents, question mark, question mark, question mark, okay? I may only stick with 1 question mark, but I will ask which documents. And you will say, the accounting documents, okay? And you'll have to tell me which ones, and you'll find that those don't exist, because that's not the test for appropriate test for segregation duties. The starting point for testing segregation duties would be observing segregation duties to make an understanding of how the process works, okay? And then we would probably have some sort of reperformance test that we would perform after that. So making sure that we understand that the test is appropriate to the scenario that we're talking about. And we did a lot of that in this chapter. Also, with respect to segregation duties, there were 3 principal incompatible duties according to the IIA. You have had 2 classes now. We've talked about that. CAR, custody authorization recording. You should be pros on that right now. Like I said, if you come back and you're a very well-known alumni and you come back and visit and you see me on campus and say, hey, Dr. Barnes, the first question I'm going to ask you, 3 segregation duties, go. Okay. I won't do that, but I expect you to know it anyway. Okay. I should start doing that. So there's a funny story. There was actually an alumni. I made a joke because it was a tax track alumni from the MAC program, and I asked, all right, so what are the management assertions? And they go, vouching, tracing, correctness, and so it just goes away. It goes away. So yeah, the student did pass the CPA exam. So alumni, I should say, not student. This alumni did pass the CPA exam, but yeah, didn't actually use it in practice. Please make sure you know the 3 principal incompatible duties according to the IAA, and you understand the scenarios that they're used. We talked about segregation duties a lot in these last few chapters, so please make sure you understand the applicability. All right, code of professional conduct. I'm going to tell you there's one thing and one thing alone you should focus on, and that is the independence rules, okay? All right, so anything that relates to the independence rules, so this stuff down here, make sure you review that. One area that I think is extremely important has to do with the covered member rules, okay? The covered member rules, okay? So who are covered members and what are their rules? So there were 6 rules. I list number 6 out there, not because I think you need to memorize them, but you should make sure you review them. Also, it's important to note with respect to covered members that there's a list of individuals who are covered members, and there's also individuals who have to follow the rules of covered members, okay? So what I mean by that is that there are people who are specifically called covered members. They have to follow the rules of independence. And then there's people who are associated with those individuals that also have to follow the rules. And if you remember, that's going to be immediate family members, which would basically be a partner or partners and dependents. Okay. And then close relatives with material interest or significant influence. Close members are going to be parents, siblings, and non-dependent children. Okay. So any of those that fall in that category, they also have to follow the rules of covered members, even though they're not covered members themselves. That's a big area of emphasis on the CPA exam, and that was something we talked about a lot during that lecture. I will tell you the question on the exam that I ask you, that's going to come from that area. It's going to be very similar to the one in the practice exam, so just be prepared. Chapter 10. Fraud risk and revenue recognition. We talked about this very briefly. There's a slide on this. Please make sure you can understand and describe each one of these. Okay. Side agreements, channel stuffing, related party transactions, bill and hold sales. I would expect you to be able to recognize that or even describe it if I use that as a short answer question. Segregation duties, we've talked about that. Please make sure you see the remark in the chapter 6 notes. With respect to revenue and purchasing, segregation of duties with respect to the process areas was extremely important. That was kind of how we defined those 2 chapters. We said, these are the process areas. This is our primary area of responsibility with respect to one of the segregation of duties. So you should be able to understand those. So if I say, what is the accounts payable function? You should say, oh, that's a recording function. I remember that from Dr. Barnes's wise discussion. So yeah, so that's a way to approach that. So make sure you look at that. It's still relevant to the other chapters, but I think it's particularly relevant to chapters 10 and 11. All right. As far as control activities, test controls, it probably goes without saying that this has to do with those tables that I had you look at. I want to reiterate the point on that. It is not going to be possible. I don't think it's okay. Maybe it's possible if you had a longer time frame, okay, and you really had no social life and no other classes to study for, okay. It might be possible to memorize all the information on that table, those tables. I do not expect you to do that. I do expect you to review that and understand the key concepts there. What I'm primarily looking for is if I give you a risk or an assertion that you can identify the appropriate control and an appropriate test of that control. The question that I'm going to ask you for the problem will be very similar to the one that was in the practice exam, and I'll talk about the nature of that when we get to that, what you can expect for the exam itself. All right. But you were responsible. You will notice the question on the practice exam only dealt with the risk and the control. It didn't actually ask about the test controls. I will ask questions about appropriate test of controls as well. So you need to know all dimensions of those tables. So yeah, if it's bolded, italicized, and got stars around it, it's really, really important. So please make sure that you take it seriously. Confirmation discussion. Please review the confirmation discussion. Remember that was a little bit weird because I ran out of time at the chapter 10 lecture. I did that at the beginning of the chapter 11 lecture. So if you go to the chapter 11 lecture and look at the beginning, that was the discussion of confirmations. Confirmations are used in a lot of different scenarios. So that was how we introduced them. We talked about the nature of those. So it's going to be important. Expense categories. Something that has come up. I don't generally ask a lot of questions on this, but it has come up. Has to do with the expense categories. I thought that this was really, really straightforward. Okay. I didn't think that I figured that you've taken multiple cost accounting classes. I mean, Dr. Otero said you've only taken one cost accounting, but let's be honest, managerial and cost, same thing. All right. But yeah, I mean, they are. I mean, she's going to come storm me and throw something at me. All right. So yeah, you've taken multiple cost accounting classes, so I assume that the expense categories are pretty straightforward. Please make sure you're familiar with those and you can delineate those between those. It's come up that I've asked a small question on that, and people have just really struggled with that. I don't know why, because Dr. Otero taught you well. So make sure you're familiar with those. Again, here's the bolded italicized information about the test controls and how the controls testing sequence works for all of these. Again, that was two tables. That was the chapter 11 tables. Make sure you review those. For context, the two that were in the chapter 10 were the revenue controls and the cash receipts controls. And the ones that were in chapter 11 were the purchasing controls and the cash disbursements controls. Okay. And both of those tables are important, not just one or the other, but both of those need to be reviewed in each chapter. Search for unrecorded liabilities. How is it conducted? We did an earthwork clothiers assignment on that. Okay, EWC assignment. It should be fairly intuitive, but if I ask you the conduct of that particular activity on the exam, you should be able to replicate and explain what it is. Also, remember that search for unrecorded liabilities does not identify an actual unrecorded liability. It's looking for the possibility that a transaction might reveal an unrecorded liability. So it identifies something that's suspect and something we have to investigate further, but it doesn't specifically identify those unrecorded liabilities. It just says this may be an unrecorded liability. All right, chapter 12. Chapter 12 is pretty short and pretty straightforward and to the point. So let's go ahead and really quickly note two things you should probably focus on are going to be the chapter 12 table with respect to control risks. So it's kind of it's not bolded or italicized, but you should think of it as bolded and italicized. I'm not sure why I let up the bold. I'm just going to go ahead and bold it and italicize it right now, just so we have it. There we go. All right, that's better. Should have put a star at the beginning too. Just yeah. Okay. Okay, there we go. Everybody can be happy. All right, make sure you take a look at that. That's possible for the exam. Also, substantive details over payroll and HR. I did this for all the chapters, but it's probably worth mentioning. There's likely to be a question over here over the types of testing that you would do over substantive testing for payroll. So we've looked at different types of tests and we identified the associated assertion. Make sure you review those. That's something I would expect you to know as well. Chapter 13. Chapter 13. Let's just let's see. Bold, italicize, star. What you doing in class today? Watch my instructor type out stuff onto a study guide. There we go. All right. So yeah, make sure you're familiar with that. That's the last time I'm going to do that, but very, very important. And then make sure you understand the substantive test of detail over inventory. We did those for all those chapters. I should say that those substantive test of details were important for all the chapters, but they're particularly important for the later chapters because they're specific to process areas. So please make sure you take a look at that. And then how are assertions tested in inventory count? We had a series of slides where we talked about those. Some of these are very straightforward. I don't expect you've forgotten these because we did the sheet to floor and floor to sheet testing back in chapter 5. But make sure you're familiar with all of them, not just the floor to sheet, sheet to floor, but you're familiar with all the tests that are associated here. So we talked about testing for all 5 assertions. Also, please make sure you review the auditor planning related to conducting inventory count. So this one right here. So if you remember my story of talking about how frustrated I got because instructions are not clearly conveyed to me, that's why it's really important to convey those instructions. Because I've had a past trauma about that, then it's possible I will ask a question about it because I think it's important. Okay, so please make sure you look at that. All right, moving on. Chapter 15, sorry, chapter 14. Oh, I have stuff on chapter 14. Oh, that's okay. All right. So Make sure you are able to explain why risk levels are associated the way they are. So both control risk, inherent risk, and control risk. Okay. And so something to note here is I will talk about this a little bit more when we get to the other larger accounts, but prepaid expenses are pretty obvious that the risk level is low because they're generally not material and they are pretty easy to understand the accounting for. That's something you learn very early in your accounting or career. If I, however, I were to say the inherent risk of something like property, plant, and equipment, okay, inherent risk would be a little bit higher because we're talking about larger transactions that are subject to valuation. And then what if we were talking about something like bonds or equity? What's the inherent risk associated with those? It depends. Yes, that's always the answer. Okay. Even if it's not the answer, that's still always the answer. Okay. And this one actually is the answer for that. We're talking about bonds, we're talking about equity. It really depends on the nature of the instrument. If it's a complex instrument, then it could be very high risk. If it's not a complex instrument, it could be low risk. Okay. Um, As far as property, plant, equipment testing goes, generally they're material and important. So fixed asset roll forward is generally how we test that. Now, keep in mind that if we're talking about a brand new audit, they've never been audited before, there's no foundation, we would have to test all of the assets in the balance sheet. But if we're talking about a roll forward audit where we've done previous testing or somebody's done previous testing, we can actually just focus on acquisitions and disposals because we've done testing for the previous items that were in the financials, okay? The previous assets that were tested in previous years. So that was the idea behind a fixed asset roll forward. We start with a beginning balance that we know is correct. We test the acquisitions and disposals, and that gives us our ending balance. That was kind of the easy way to go around that. Remember, there are four basic categories of PP&E transactions: acquisitions, disposals, depreciation, generally going to be tested through analytical procedures. And then we threw leasing on here because leasing can actually fall into either category of acquisitions or disposals, but they're just different types of transactions in this regard. All right, chapter 15. This is a little bit more of a reflection on what we talked about. So remember, inherent risk, make sure you can explain why inherent risk depends on the situation. We're talking about long-term debt. It depends on the complexity of the instrument being audited. This is where we started talking about reliance on a substantive strategy. Technically, we talked about this back in PP&E, but let's go ahead and talk about it here now because I had a really big spiel about it. For all of the processes we talked about before, we're doing a reliance strategy. And the reason for that was that there were so many transactions that it did not make sense to do anything other than rely on controls. It's not intuitive or not reasonable for us to test all these transactions. So instead, we rely on the entity's controls and we plan to perform test of controls. With respect to these larger accounts like property, plant, and equipment, long-term debt, equity, there may only be a few transactions per year. So it makes more intuitive sense to test the transactions rather than surrounding controls. So if we're not required to test controls in a particular area, sometimes we'll say we're not going to test controls, we're just going to test the transactions. That's what the substantive strategy applies in this particular situation. So think about a substantive strategy as a situation where we would have really large assets with minimal activity. That would be the general, or really large, not assets, really large transactions with minimal activity. Okay. All right. I'm going to say control risk. Okay. Sorry. Stockholders' equity, there was a quick note here. Generally, we're going to use a substantive strategy, but if we do rely on controls, true segregation of duties is very important. For the most part, we had some segregation of duties, specific nomenclature, like when we talked about prepaid assets. Remember, I said prepaid assets focuses on authorization or recording and not custody, because generally organizations don't have custody of their own prepaids. They've already given them up to somebody else. So that was one of the differences. So make sure you look a little bit of the segregation of duties stuff in each of the chapters. The only one that was really important to note is that for investments, true segregation duties has to be held. It has to be all three responsibilities need to be separated, simply because it is very easy to overstate investments or to misrepresent investments if they're not true segregation of duties. Auditing dividends, we're going to talk about this on the practice exam. So this reflects something I talked about during the lecture. So auditing dividends, when an independent dividend dispersing agent is used, confirm and agree the dividend authorized by the board. And then when it's not used, recompute the dividend and trace the disbursement to the disbursement or payable. Now that seems like a mouthful, and you may have just answered that question by copying off the study guide, and that's fine, okay? But the whole key here was not so much the procedure that was being used, but the critical assertions that were being tested. What were those two assertions that we talked about? VA incompleteness. Yes, very good. Okay. So that would be what my focus would be for you to understand on this particular area. We're talking about dividends. We're trying to make sure that VA completeness have been properly tested. And we would change those tests depending on the situation. Auditing through the balance sheet. What do we mean by through the balance sheet? Well, that means that uh, basically every one of our transactions will eventually flow to the balance sheet. So if we make sure the balance sheet is correct, by association, we're making sure that the income statement is correct. That does not mean that we don't test income statement accounts, but generally they are tested indirectly, okay? Oftentimes through analytical procedures or as part of testing for something that's a related balance sheet account. An example of that would be, how do we test revenues? We generally test accounts receivable that are associated with that, okay? So that's how we would validate information in the income statement. Okay, chapter 16, last chapter. The primary documents needed for testing cash. So obviously you need to know what these are and you need to know what their role is in testing, okay? So if we're going to test cash or we're going to be testing the bank reconciliation, we're going to have to have a copy of the bank reconciliation. That's pretty obvious. We also need that standard bank confirmation. What is the purpose of the standard bank confirmation? What does it validate? Yeah, beginning balance in the account. Good. And then the cutoff bank statement, what does that validate? All of the differences between the book balance and the bank balance. Okay, so those checks that are outstanding, those deposits in transit, and any charges that need to be recorded. So make sure you understand the difference between those. For this, just as a reminder, for these three documents, you need to be able to describe each of those documents and their purpose and their role in this particular testing. Okay, so there's that responsibility. There were additional procedures when a fraud is suspected. You do not need to be able to describe these procedures, but you do need to be able to identify them if they come up, okay? Or basically tell me what they are. So I don't expect you to describe extended bank reconciliation procedures or proof of cash or test for kiting, but I do expect you to know what they are. Remember segregation duties over the investment functions. This is the same rule that we talked about with respect to equity. Segregation duties over investments and equity are kind of held in the same regard. We need to have true segregation duties simply because it's very easy to misstate them otherwise. So please make sure you review that. There were some tables on both of those chapters that kind of related to that, so I would review the segregation duties tables. All right, we got more bolding and italicized. So this is just the tables that were related to those controls. I'm going to go over that in a little bit more detail when we go to the practice exam, and then make sure you review the search for unreported liabilities activity and the audit for cash activity. Just have some familiarity with that. I don't anticipate the questions that I will ask will be going into as nearly as much depth. Maybe for the search for unreported liabilities, that was a pretty easy activity. But for the audit of cash, I may ask you some very basic questions. I won't go into nearly as much depth as that particular activity goes into. But I would review those, make sure you have some understanding of what's happening. All right. Any questions on the study guide anything I didn't cover that you have questions about? Any clarification required? Round of applause for my immaculate study guide. Yeah, there we go. Yeah. If I have to petition for it, it's not real applause, is it? Yeah. Okay. Okay. Let's go ahead and go through the practice exam. So funny story, when I was doing the practice exam back in spring, I was having Dr. Caden come in for my third review, and she has to sit in and do a peer evaluation. And this is like the first time that I've not used Casey Staden on a practice exam. I was apologizing to her. I says, yeah, Casey Staden is usually on my practice exams. And she was saying, that's okay. It's okay. They'll get to know it. But Casey Staden is on the actual exam coming up. So that's good to know. So, but this one's Terry Ocatho. Okay. Terry Ocatho. And still in the Kansas City office of Harris Jackson Carter. She's a manager on the annual financial statement audit for Isaac Eisen Industries Incorporated, public trade company in the United States located in Kansas City. With respect to independence requirements, the AICPA Code of Professional Conduct, which of the following situation would most likely impair Terry's dependence on the 4A engagement? All right, so let's go ahead and so we've got an all of the above, which looks tempting, okay? But what do we know about all of the above? It's often a red herring, okay? So we got three answers. We need to go through all these. So Terry is a member of the same country club as several of the executives on the 4I management team. Does that impair independence? As long as she's not in a financial role on the country club with the executives, the answer is no, okay? And there's no indication in that case. So we can eliminate two answers. We can eliminate A and D, okay? So love it, two birds, one stone. All right. 4I still owes a material amount of fees of HJC to HJC from an interim review engagement conducted 6 months ago. So is that going to impair independence? No. What does the time period need to be? A year or longer, okay? A year or longer. So we got C, threatened to sue HGC for conduct in the prior year's financial statement audit, but has not filed the paperwork. Well, they haven't filed anything, so that's fine, right? So actual or threatened litigation will impair independence. So if they threaten to sue, that's enough for us to say, well, we're not doing the audit then. Okay, so that's a clear answer. That's impairing independence. All right, Terry's primary reported conduct for the 4i audit is 4i's controller, Davis Templeton. Terry believes that Davis may be fraudulently overstating 4i's revenue by recording fictitious sales. Anybody named Templeton you can't trust. Okay. Which of the following audit procedures would most likely be used to identify the situation? All right, so let's go ahead and before we jump in here. Fraudulently overstating revenues. What assertion does that risk represent? Existence occurrence. Okay, so we're looking for a test of existence occurrence. So we're probably looking for what word? Vouch, okay? Now, do we see the word vouch in any of the answers? Yes, but it appears twice, so it wasn't that simple, okay? We had to figure out. So we're trying to determine if the sales represent actual legitimate sales. Those sales actually exist. Which would be the better approach? To vouch back to the sales invoices or to vouch back to the original shipping documents? Which would be a stronger test of existence occurrence? Shipping documents. It's very, very hard to fabricate shipping documents because the shipping documents represent third-party carrier documents that go out to, or could have to include third-party carrier documents to show that the items are shipped out to a party. Invoices, we basically create an invoice and put it in the system. So the shipping document is going to give us much more assurance in that regard. So even though these are both tests of existence occurrence, this is a much stronger test. With respect to fictitious transaction. I can't speak. All right. Oh, yes. I will use the words vouch and trace. I will not use them. I will not use them incorrectly. So if you see the words vouch and trace, you can assure they'll be used correctly. At least I have one point, long time ago, incorrectly used the word vouch and trace, okay? And I was very embarrassed about it because I said I would never use them incorrectly. I give my students credit for that. So if I do use it, you can assume it's correct, okay? If it's incorrect and you point it out, I will give you credit for that question. I'll give everybody in the class credit for the question. That was one time. I don't know what was going through my head, but yeah, I will use the words vouch and trace, but they will always be implied in the correct direction. But I did say in class that I may not just give it to you, obviously. The reason I used this one is because this one was a little bit more challenging question. You had to select between two possible vouching options. So, all right. Part of her confirmation testing of her 4i's receivable, Terry did not receive response to her initial or second request for 4i's customers. Assuming that Terry used positive confirmations, which of the following would not be an appropriate alternative procedure for Terry to gain assurance regarding the customer accounts receivable balances. So if you looked in the chapter 10 slides, specifically slide 31, there were 3 items listed there, okay, that are the 3 answers that are all correct. There's one that's not listed, but let's assume you don't remember that slide. Let's assume that you just kind of said, you know what, we're close to the end of the lecture. I don't want to pay any attention to what Dr. Barnes says, so I'm just going to ignore this last slide. And that's fair, okay? I do talk a lot, all right, and really, really fast. But let's go ahead and assume that you've forgotten this and you want to find the odd one out. So which of these ones were listed on the slides? Examination of subsequent cash receipts, examination of shipping documentation, examination of client documentation related to accounts receivable. Those were actually on the slides. And those seem fairly intuitive. What about this one up here? Examination of controls over accounts receivable. Would that be an appropriate way to run an alternative procedure over accounts receivable confirmations? What do we know about confirmations? What phase of the audit can they be used? And not as test of controls, okay? They can be used as substantive test of details only, okay? Does it make any intuitive sense to say, we could not run this substantive test of details, we're going to go back and test controls to make sure this is correct? That kind of seems kind of silly to me, considering that we've already conducted test of controls and we already know confirmations cannot be used to test controls. It doesn't make sense to alternatively test confirmations by testing controls. So there's no way that we can associate these two. So even if you don't remember the slides, my beautiful slide that had all these 3 in here, you can kind of say A doesn't make any sense. So by the way, if I do ask you questions where I ask for specific information in a series of slides, you can always assume that I've got a back door where you can figure out something like that. So do not panic, all right? This has happened on multiple exams where I've asked detailed questions and everybody said, I just didn't remember what you said in the lecture. I said, yes, but you remember how to audit, right? And so that's what I'm ultimately going for, okay? Even if you didn't answer that question correctly, you should have been able to say, this doesn't make any sense. And you can eliminate that one pretty easily. Part of our testing controls testing over purchase processing. Terry is evaluating segregation duties over the functional areas of purchasing. What are segregation duties again? Custody, authorization, and recording. So we're looking for proper segregation of those responsibility areas. Which of the following describes a weakness in 4I's accounts payable procedure? The accounts payable manager issue purchase orders. What do you guys think? Does that sound good? Should that be something the accounts payable manager should do? So accounts payable manager is responsible for what? Recording. Okay. Issuing purchase orders sounds like authorization. Whoa, he sounds like a violation on A right away. Let's just go through the rest. Accounts payable system compares the receiving report to the vendor invoice. Comparing two documents to make sure that they're consistent with one another. It seems fine. There's no violation there. Accounts payable clerk files invoices and supporting documentation after payment. Do we want supporting documentation to support the for the invoice? Probably a good idea to have that. That's how we do the three-way match procedure. Accounts payable clerk manually verifies arithmetic on the vendor invoice. Yeah, probably making sure the math is correct is probably good. So none of these represent violations of segregation duties. So A is the only one that's clear. So A is our answer. I apologize for this one. This one's one that I found through an external source, then realized it's exactly the same as a homework question that I gave you all. But let's see if you remember the homework question. All right, to determine whether 4I accounts payable are complete, Terry performed a test to verify all merchandise received is also recorded. The population for documents for the test consists of all what? So we're talking about completeness. All right, so for completeness, what are we doing? We're going from source to record, moving bottom to top. So we're talking about what source document do we start with? Well, the key is to understand if we're trying to prove what was received, what was recorded, we probably should start with something that relates to receiving, such as the receiving reports. Okay. That was all there was to that question, is basically saying, I want to start with the receiving report to make sure that this got recorded. So let me use that as my source document point. Terry is testing controls over 4I's payroll expense. One of the management assertions she's highly concerned with is existence occurrence. Okay, so let's think about that. What would be a violation of existence occurrence with respect to payroll? Let's not even think about the rest of the question. Let's just think about this concept. What would be a violation of existence occurrence related to payroll? Overpayment, or somebody getting paid that doesn't deserve to get paid? Something along those lines, okay? Too much is being paid out. More than is being paid than should. So let's keep that in mind, and then we'll go to the answers, okay? Which of the following represents a possible statement related to the management assertion of existence occurrence? Employee compensation and payroll deductions are computed incorrectly. What assertion does that violate? VAA, okay? Employee work is performed but not recorded. What are we talking about here? Completeness, okay? Payments made to employees at rates in excess of authorized amounts. That's also VAA, okay? And then payments made to valued employees who have not worked. That's paying for somebody for something they didn't do. The work does not exist. Therefore, there's a violation of existence occurrence. So D is our answer. All right, our friend Davis Templeton again tried to assure Terry about the adequacy of 4I's controls over payroll by explaining how individuals who are responsible for approving timesheets are not able to input employee hours into 4I's payroll system. What does that sound like to you all? Proper what? It's the proper segregation of duties right there. That's what's being described. Did you all pick that up when you were reading through it and saying, oh, okay, that's authorization and recording. Okay, yeah. Terry is satisfied this control would help address the risk of misstatement related to existence occurrence because Terry is a good auditor. However, she believes she needs to test the control. Which of the following would be an appropriate test of this control? Check the numerical sequence of timesheets. What do you guys think? Nope. Inspection of timesheets presented for approval by the supervisor? Nope. Observe and evaluate proper segregation of duties? Yes, we just talked about that. Segregation duty starts out with an observation of the SOD process. Perform a search or unrecorded liabilities related to accrual payroll obligations. I put that over there because it sounded good. And when I gave this as an exam, somebody did answer that. So yeah, I'm clever. I feel kind of vindicated sometimes when I get a clever answer that fools somebody. I know that's terrible because that means they missed points, but in the long run, what does it really matter? Yes, it doesn't. Yeah. Terry plans on observing it. Don't miss questions on the CPA exam. That's what I'm going to say. Miss the questions in here, not on the CPA exam. Yeah. Terry plans on observing the 4I's year-end inventory count. Which of the following statements is correct with regard to the inventory count? Well, let's just go through the questions. Because the inventory count is taking place at year-end, Terry's observation of the inventory count is not considered a test of controls. This is an interesting one. Can we consider an inventory count a form of test of controls? Yes, we specifically talked about that. Said it can be a dual purpose test, okay? It can actually validate both transactions and account balances. So that's a possibility, all right? Terry should ensure that no inventory movement or production will take place during the account. What do you all think about that? Hard to get an accurate number if inventory is constantly being moved and sold and being shipped out. Yeah. So yeah, it's probably our answer, but let's go through the rest. Since the client is performing the inventory count, Terry does not have a responsibility to evaluate the instructions and procedures for the count. Just remember, when you see an answer like that, that little picture of the dog that said angry on it, that's Dr. Barnes, okay? It's the dog saying angry. When you don't have proper instructions, you make Dr. Barnes angry, okay? Since the client is performing the inventory count, Terry does not need to perform test counts of her own. So the client performing the inventory count, what are we doing if we're watching them then do the count? We're observing, okay? What do we know about reliability of observation? Low. What do we want to do? We also want to reperform some of the tests. So test counts of our own will give us more assurance. We're not going to count all the inventory. It's not our job, but we want to make sure we do some test counts to get more assurance. So B is our answer. All right. Terry performed several audit tests during inventory count observation to address various management assertions related to inventory. Which of the following tests would best address the completeness assertion? All right. Completeness. So we talked about how we can actually address multiple assertions. This one's a pretty straightforward one. We've been talking about it for most of the semester. So if we're talking about completeness, we're talking about source to record, moving bottom to top. So that sounds like floor to sheet. Okay. So we're looking for floor to sheet, which Dr. Barnes is such a nice guy that he actually gave you sheet to floor and floor to sheet. You just had to be able to interpret that. So floor to sheet is B right there. Okay. By the way, what is sheet to floor? What is that test? What assertion that test? Existence occurrence. Goods held in consignment for others held on a build and hold basis. What is that testing? Rights and obligations. Okay. Observe the conditions of inventory items for obsolescence, slow moving, or carried into excess quantities. What is that? Yeah. Okay. So good reminder. Even if you immediately observed floor to sheet and said just kind of like, all right, that's the answer. Look at the other answers and make sure you understand what assertions those relate to. Terry noted that 4i appears to have implemented segregation duties over transactions related to prepaid assets. Which of the three principal and compatible duties would be least relevant to respect to prepaid assets? Well, all three duties would be equally relevant, right? Because we want that all of the above. Finally, in this semester, we want the all of the above. Is that a correct answer? No. Which one's not relevant? Custody is not relevant to prepaid assets because we don't have custody. Our client doesn't have custody of those prepaid assets. So B is our answer. I promise this will come eventually. It'll show up eventually. It'll show up eventually. Maybe not. Maybe not. Maybe I may be lying to you. All right. While HJC's audit of 4i's financial statements are thorough and comprehensive, Harry has noted some of 4i's accounts are not tested directly. What type of accounts would not be tested directly? What type of accounts we call those? Income statement accounts. Income statement accounts. These accounts are tested as part of other accounts or processes, usually tested indirectly through the use of analytical procedures. So which of the following accounts are most likely to be tested indirectly as described above? We're probably looking for an account that's in the income statement, right? Is there an account in one of the four listed that's in the income statement? Intangible assets. No. Interest expense. C. Okay. C. Just waiting for y'all to say, wait, that's not, wait. Dr. Barnes has forgotten financial accounting. All right. Other than comparing actual cash balances to budget amounts, Terry's elected not to perform detailed substantive analytic procedures over 4i's cash account. Which of the following is most likely reason why Terry is not utilizing substantive analytic procedures over 4i's cash account? Well, what about because the balance of 4i's cash account is probably much higher than its other balance sheet accounts? Is that a true statement? Doesn't make intuitive sense, and it's also not a true statement. Cash is usually much smaller than the really long-term accounts. So like long-term liabilities and property, plant, equipment. So the really large accounts. Because it's more efficient for Terry to rely on tester controls and subject tester details of a 4i cash account. Is that really going to be true? I mean, it might be true, but it's probably not going to be relevant to analytical procedure determination, because if it's still effective to use analytical procedures, we could do so. I would say if we could use analytical procedures, they'd be far more efficient because that's going to developing a model rather than doing the test work. So, all right. So it's not true in this situation. Because there are no analytical procedures available for testing cash. Is that true? There are. There's not very many. Okay. So we can compare to budgeted amounts, which is a really big one, or we can compare to cash balances from previous period. We can do a basic trend analysis. What about B? I skipped B. Did anybody notice that? It's like Dr. Barnes is getting older. He's skipping answers. No, I did it deliberately. Of course, Corey's cash balance does not have a predictable relationship with other financial statement accounts. Do we have a predictable relationship between cash and other accounts? Like if I change sales, is that going to change cash? And we know that sales going up always means cash going up. Well, do other things possibly affect cash, like purchases? Okay. What about financing activities, investing activities? What about other purchases not related to revenue? What about other revenues that are not related to sales? So all these things can affect cash. We can't predict what's going to happen to cash based on one series of transactions. So that's the answer there. B is our answer. All right, let me go ahead and move forward to this one. Okay, so Here's what we got. We've got a series of controls. Now, I do want to first of all make a really quick disclaimer. All right. What I used to do is I used to do an alternation between revenues and purchases. Okay. And if I did what revenues on the practice exam, I did purchases on the exam itself. Unfortunately, somebody had the bad conscience to say, this is like 6, 7 years ago, so you can't go back and get this student. The bad conscience to say, I knew you were going to test purchases because you went over revenue on the practice exam. So now what I do is I've got this the practice exam, and I roll a die every single semester and say which one am I going to test on in the exam itself. Okay. It is exactly a 33% chance between revenue, purchase, and a split between inventory and human resources or payroll. So this is an example of purchase transactions. I do not want you not to study the purchase transactions just because I tested it on this exam. There's a possibility I could ask you purchase transactions and cash disbursement transactions again. If I do ask another area other than this, if it's purchases, it will be purchase transactions and cash disbursement transactions. If it's revenue, it will be revenue transactions and cash receipt transactions. And if it's the other, it will be 2 controls related to payroll transactions and 2 controls related to inventory transactions. That is the split that I always do between those. Again, 1/3 chance for any of those to happen. I'm not going to tell you which. I'm just going to tell you that you should not assume it won't be purchases. Okay. There's a 33% chance where you're going to be wrong in that scenario. Okay. So study all of them. All right. Second thing I think you should note. I personally believe that the easiest way to approach this question, the question I'm going to ask you will be exactly the same format as what I'm going to ask you here. I think the start is to come over here to this and look at the types of controls that are listed here and do 2 things with respect to each control. Make sure you identify what is the control, what is the type, or what is the assertion related to the control, and whether it relates to purchases or cash disbursements. In the case of revenues, you would do revenues and cash receipts. In the case of inventory and human resource and payroll, you do payroll or inventory. So let's just do this. Let's practice this. So accounting for the numerical sequence of checks, what assertion does that relate to? Talked about that a few times. That's completeness. Okay. Does that relate to purchases or cash disbursements? Well, checks is a form of payment, so it's going to be cash disbursements. So we got completeness and cash disbursements here. Okay. I'll receive reports forward to the accounts payable department on a daily basis. What assertion is that? This is an easier one. Daily basis is a big clue. Cutoff. Yeah, cutoff. Okay. We're talking about receiving reports. We're probably not talking about cash disbursements. We're probably talking specifically about purchasing. Okay. So cutoff and purchasing here. Daily cash disbursements report reconciled to cash and checks and electronic payments issued. This is an easy one. Easy one. Start with the letter V. Yeah, everybody was looking at me. I was like, wait a minute, maybe it's not so easy. But no, it really was. It was. VAA. Okay. And what do we think? Do we think daily cash disbursements reports relate to cash disbursements? Yeah, probably so. So VAA and cash disbursements. Purchase not recorded without approved purchase order and receiving reports. Okay. This one's a little bit more tricky. What's happening? We're not recording something unless we've got supporting evidentiary documentation. We want to make sure that the transaction actually exists. So existence occurrence. This specifically relates to purchases because it starts with the word purchase. Okay. So in that case, existence occurrence and purchase. Use of a chart of accounts. So we want to make sure things are recorded in the proper account. So what are we going to say? Proper category of account or classification. And this can be used for either one. It can either be purchases or cash disbursements. Use of disclosure checklist. This is making sure that everything properly gets disclosed that needs to be disclosed. So we're talking about things to go on the financial statements, which refers to presentation. And this can actually be any category of accounts. Okay. So once you do that, you've got your assertions identified and you've also got the category of the transactions identified. So now let's go back. Purchase transaction recorded the wrong period. What is that a violation of? Cutoff. Okay. Do we have a control related to cutoff that's in purchase and transaction? We sure do. We've only got one cutoff control and it relates to the purchase transaction. That was going to be number 2. All receiving reports forwarded to the accounts payable department on a daily basis. All right. Purchases recorded, but goods or services are not ordered or received. What is that a violation of? Existence occurrence. And we also have our existence occurrence control that we identified for purchasing. So that's how we identified that there. Next, cash disbursement charged to the incorrect account. Okay. Not the correct account. So that's a violation of classification. And we only had one control for classification. It could be either one, but this is the only use of classification. So we're going to use it here. So classification, it's going to be use of a chart of accounts. And cash disbursements were made, but not recorded. What do we got? Completeness, yeah. We have completeness for cash disbursements. That was number one, the accounting sequence of checks. Okay. If you follow that pattern, I think you will find success on the exam. Just make sure that you understand what the relevant assertion is so you can do the identification. You do not need to follow that pattern. You do not need to follow that procedure if you find something more comfortable, but I've found it to be more successful if you list out all the assertions related to the controls first and then come back and try to work on everything. Then you can kind of find the gaps. All right, let me go ahead, pull up key for the last part. All right. So what's a substantive strategy? Two accounts where the auditor would likely use a substantive strategy. So substantive strategy is basically where we say we're not relying on controls for this process area. It would be inefficient to do so. Basically, this is going to be used when we're talking about an account with minimal transaction activity and usually large balances. There were four accounts that we talked about in this. We talked about property, plant, equipment, investments, long-term debt, and stockholders' equity. You just need to be able to list out two of them. So big, large accounts. By the way, if you said property and then equipment, that's not cool, okay? You did need to say one of the other accounts. I guess that would be fine, but still, anyway. Reliance strategy basically means that we're relying on any of these controls. That also means we are required to plan and perform test of controls in a process area. All right. When does this usually happen? We're talking about a process area that has consistent transaction activity. That would be every other account on the balance sheet other than the ones we just talked about. So anything that's not a large, infrequent account, cash, accounts receivable, accounts payable. You could talk about inventory. Those are kind of the big ones that we talked about. There's certainly a number of areas we talk about, but anything that's frequent activity is transactions. We'd have frequent transactions, and so that we would have test controls in those areas. That's pretty much what I was looking for there. Hopefully, you didn't have too much trouble with that. This last one, this is one that I asked on a previous exam. So because it's on the practice exam, there's only like a 7, 8% chance I'll ask it on the upcoming exam. No, this is the question about the dividends declared. Again, this is going to be identifying not so much what the types of tests were, but could you identify what the assertions that were being tested here? So confirming the amount with the dispersed with the agent and agreeing the amount authorized by the board of directors. Talking about completeness here and VAA here, and we do a similar completeness and VAA test down here. We have VAA where you're computing the amount of the dividend authorized by the board of directors and then tracing the amount of cash transferred to the dividends payable. So again, if you didn't get the exact wording on that, that's fine. If you remembered that they were testing completeness in VAA, that's ultimately what I was looking for on that particular question. You could have come up with different wording on your answer, and it probably still would have been kind of correct in that situation. I want to reiterate that point because I think it's extremely important. This exam is the one where the heaviest subjectivity comes in. If you are not certain of an answer, don't give up, okay? Use your best judgment and your best understanding of what you've learned so far. Even if you don't specifically know the answer, you can usually come to a reasonable answer, a reasonable conclusion given what you have. I've had many people, and to my credit, when I do questions like this, I usually make them for a few points, like 3 or 4 points. But I've had many people who have gotten to a question, and it's like, I don't remember any of this. I'm just going to leave it blank. Do not leave questions blank on the exam, okay? You all have enough knowledge that you can actually answer the question, even if you're not innately familiar with the area. I believe that in my heart, okay? So, office hours tomorrow. If you want to come talk to me, have questions, feel free to send me an email. Otherwise, I will see you in 2 days for the exam.